to 22 Minutes in Lending. I'm your host, Vince Passione, and today I'm excited to introduce Kara VanWert, the Chief Lending Officer of Veridian Credit Union. I've been fortunate to have had the chance to work with Kara for close to 10 years, both in her role at Veridian and also in her role as board member and now chair of Member Student Lending CUSO. During her tenure at Veridian, Karen has driven innovation and impressive growth. Whether she's leading major changes or focusing on member needs, Kara brings energy, vision, and expertise to every challenge. Kara, I appreciate you joining me today.
Yeah, thank you for the invitation.
Welcome. Last time I visited, we were talking about your average age of your member. What can you share that with the listeners? What is the average age of your member at Veridian?
Oh, Vince, I need to look that up.
Yeah, I think when we met with it's Renee, right?
Yes,
Yeah, we met
yes.
Renee. I thought that you were skewing like 47 years old,
Yeah,
and
that.
yeah, which was very
Mhm.
surprising to me. Um, and I was just curious. Do we know the cause? Is it just where you're located? Is it the demographic, the cities you're in, the towns you're in? Because that is, I mean, the average age of credit union member, I believe, is now 55 to 57.
Mhm.
But that is significantly lower than your peer group.
Yeah, it is lower than our peer group, and I think that is attributed to the products that we offer and how we focus on products that are going to that are appealing to all ages of our
Mhm.
membership, as well as the digital offering, which is if to attract the younger generation today, that is where they're looking is digitally. We have also, as we've focused on where our next is, looking for those populations of younger generations. So when you look at Iowa, you don't think of Iowa as a state with a younger population, but
I
when
want
you
to be
look
careful
at
if I
Des
say
Moines,
no there, Kara.
yeah,
I don't want to insult anybody. But yeah, I kind of see your point.
yeah, yeah. But when you look at Des Moines, and you look at the western side of Iowa and get into Omaha, there, when you look at the larger communities, there is a younger population there that is really looking for that financial to partner with and grow with throughout, all their lending and deposit needs.
Now, let's step back for a minute because I didn't get a chance to maybe just reflect on your career. So this is called 22 Minutes in Lending.
Uh-huh.
You've been at Veridian for about 20 years. All
34.
34. Oh my goodness. Okay,
Yeah.
34. Okay, I was trying
Yeah,
to be careful. In all the lending space. So kind of tell us a
primarily.
little bit. You've
Yeah.
you've seen quite a bit, and by the way,
Hmm.
right, I'm celebrating 43 years in my career. So there you go. But anyway, tell us a little bit about lessons learned, right? I was
Yeah.
watching CNN this morning, and then I was watching Squawk, and there's concerns about lending in regional banks right now. And it was interesting. The one comment was made by one of the bank CEOs was, "Look, we're being in lending is our business. We are here to take risk. Now, obviously, credit unions are a nonprofit. You're here to serve your members, but you still, right? You manage risk. And the real question is, what kind of keeps you up at night? We've
Hmm.
had other guests here, and clearly in the credit union industry, the 2021/22 vintage of auto loans was
Hmm.
was a tough vintage for lots of reasons, right? Coming out of COVID, right? Car prices were inflated. We had individuals whose FICO scores might have been inflated thanks to stimulus. There are lots of things that happened. Creating share grew, right? And that's always when
Hmm.
we see share grow in a very short period of time, that always becomes questionable and tricky. But what portfolio is keeping you up at night right now at Veridian?
Yeah. I don't know that there's a specific portfolio that's keeping me up. And I would say it's more, how do we keep up, and how do we keep up with technology and the competition that continues to come into the arena, because it's coming from all different sources. When you speak to delinquency, I think what keeps me up is, how do we continue to meet our members where they're at and help them. They don't take loans out expecting not to pay them.
Right.
But how do we help them protect themselves against possible downturns, against possible layoffs, and continue to be there for all of their financial needs?
Now you touched on something. You said there's lots of competition coming from different places. How much of that are fintechs? How much of that are the banks that are in the areas they're in? Because you are expanding in new trading areas, so in some ways you're
Mm-hmm.
competition, right? As well.
Yes, we
I had,
are.
I had Mick Olson on, not too long ago, right? And in Minnesota, in Top Line in Minnesota, right? So I'm sure
Yeah.
he's paying attention to your branch expansion. But where's the competition? Where's the biggest competition? And how much is fintechs? How much is banks? How much is
Yeah.
just maybe even other credit unions?
Yeah. And I look at fintechs specifically and how our maybe mindset has changed from over time. Because fintech used to be a competitor of ours, which they
Right.
are. And at the same time, they can help us grow. So you can look at it as strictly competition, or you can look at it as how can we partner with fintechs and be able to offer what their area of specialty is that maybe we don't have, and grow in an area that is missing on our balance sheet. But you also, yes, we have um, competition among the banks, and we have competition even among retail areas. You look at the Walmarts and the things
Like,
like, and the other retail areas that get into some of the financial offerings. And so it's not just looking at your normal competition, but even what else is out there that is entering the financial
yeah.
markets.
I can't get off any podcast
Mm.
without talking about AI. So the question is, I mean, how's it affecting Veridian? Are there any projects that you look at and say these are the ones you're most excited about? I mean, it is early. It is about data, managing the data correctly. But as a lender, as a consumer lender, specifically, what are the areas that you look and say these are some initiatives at Veridian that I believe are best practices and I'm most excited about?
Yeah. So AI in lending and in the credit union as a whole is another priority of Veridian's, because we know that AI can help simplify, make processes more efficient. There are so many opportunities, and you have to be aware, and also, just be very diligent about how you use AI. We use AI today in decisioning on the lending side. It not only gives us a point in time, like a credit score gives you a point in time,
Mhm.
um, a behavior score, but it gives you more. It goes beyond that and gives more over time, just more in behavioral. What do I want? Behavioral scores as well. So, we've used decisioning models a lot for years in the past,
Now, Kara,
but
do you use someone, do you use someone like a Zest today? Are you a Zest
yeah,
user?
we
And
are a Zest user.
what have you, how long ago did you start? Do you think you're an early adopter? I thought you started early, didn't you?
Well, we're 2 years into it.
Okay.
Yes, yes.
And any surprises, positive or negative? I mean, obviously, from a regulatory perspective, there were lots of concerns about the infamous black box, but what did you learn
Hmm.
in the experience in 2 years?
Well, I think the main thing that we have learned is just because a person has this credit score today doesn't mean that is where that is the end all be all of
Yeah.
as to where they're at. It gives you more of a historical pattern, I would say, and behavioral score.
Mhm.
So that we might have a credit score today, but their credit score 2 months ago might have been 60 points lower. And so it has that historical build into it. And so I think what we have learned is we not only need to take the score that we have, but also incorporate into our decisioning and incorporate into our underwriting model where our Zest score comes in, and using that as well so that we get a full picture of their history.
Now we have the CEO, Kareem from Fair Play. Fair Play's business it's changed a little bit, but the original business model was to come in and really assess uh, bias. Is there bias in the
Mm.
model? And there's been a lot of discussion about training data, and gee, that training data has some bias in it, so it basically will roll that bias forward. Concerns on bias when you implemented Zest? Any governance around it to make sure that we're watching bias in the model based on training data?
I would say that when it comes to bias, it was one of the reasons why we actually started to do our due diligence with Zest. And it was to mitigate the human unconscious bias that we all have.
Right.
And so we really worked with Zest to develop a program where all of that is removed because it's done, mechanically or through the machine decisioning versus a human decisioning. And no matter how hard you try, there is bias. And it actually, when we talk to our examiners, they were very pleased with our usage of Zest and our usage of AI to remove that bias that can be part of your decisioning model.
Any best practice that you'd like to share with listeners when you engage in it that you think
Mm.
really helped you? Was it the conversation did you go to the regulators first and talk about it? Was that a best practice before you implemented it?
Actually, one of our best practices was to talk to other credit unions
Ah,
and to really learn from other
mhm.
credit unions. Vince, actually, it was at one of our advisory council meetings when we were in Florida
I
that
remember.
there was, yeah, we had a lot of conversation around Zest, around using AI in decisioning models and I actually had a conversation with her after that because we were just in the beginning stages of it. And, getting comfortable, and credit unions are so, have a, are so helpful to each other. I mean, we aren't we aren't hesitant to cross that line and have conversations with each other about what's working, what's not, what did you learn. So we really used some of that, some of those conversations, some of those best practices and learnings that other credit unions before us had experienced.
No, I think that might have even been pre-COVID when we were.
It was.
Yes,
Yes.
and that was and Annie Sebastian from Navy was running education lending at the time for Navy, and I remember asking. We took a live poll of there were probably 15 to 20 credit unions, and I'd say 75% of them raised their hand and said they were using AI. And I remember
Mhm.
that crosstalk. So you're right, good best practice certainly served you well. Now let's check on the balance sheet just a little bit, and
Mhm.
I want to be careful here with our data, but we took a look last night, and it looks like you grew your loans by about 12%. So trying to
Mhm.
pack that, that's about going from about 6.5 billion to close to 7.2 billion.
Mhm.
Is that a lot for you? It seems like a lot. Is that a lot?
We pride ourselves in loan growth, and it is something that we have really focused on because it's a way that we can return back to our members in
Mhm.
low loan rates, which help spur deposit rates. And we have had a focus in the last, I'd say, year and a half to 2 years, and where we've seen our most growth is in the mortgage and home equity areas. And we've tried to, you know, have a focus on our mortgage offerings. We know that loan mortgage rates are high right now, but what can we do on our balance sheet to help our members mitigate some of those high rates and offer an adjustable rate mortgage, an ARM, and have it a little bit lower than maybe what you can get on a 30-year fixed, knowing that in 5 years, in 7 years, in 10 years, they could reprice, and offering that at a lower rate and having it on our balance sheet, because it is important that, we have those offerings to our members, and so that they can achieve their dream and of home ownership, because there is a barrier right now between rates and home prices. But we also have those members that are enjoying those 3%, 4% mortgage rates that
Right.
they received back during the pandemic. And so now, what is it? You date your mortgage. No, I'm going to say it wrong.
You love your mortgage, but you hate your home.
Yes, yes. Yeah. And so we're offering home equity rates and home equity specials out there that, like right now, we have 6 months at 1.99. And then after that, you get to, enjoy our other low rates. But, just offering that too to those members who they love their home mortgage rate, but they want to enhance their existing home where normally they would have moved. So just looking at it from both sides and across all of our membership and what they need right now.
Now, it's an interesting time, right? We were looking at some data, and I think the average age of a home in the US is about 43 years old. So housing stock is old. And to your point, when you think about what's transpired, right? You have folks in these homes that they normally would have turned around and upgraded, but they can't.
Mm-hmm.
Not can't, they won't because they do love
Right.
their mortgage rate. Um, and getting a HELOC probably makes more sense. We
Yeah.
touched on auto, looking at the balance sheet, right? Double digit growth, about 11%, mostly unused auto. What's going on there, right? Because we're seeing, right, auto prices are at the highest rate ever, partially by tariffs, but also just there seems to be this sort of languishing COVID thing that just hasn't really resolved itself. Uh, Margins are thin, the term is lengthening, but you're getting volume. So is this refi? What's going on the auto side?
Yeah, so we do have a very strong indirect lending program. It's about a third of our loan assets. So we keep in line with a lot of dealerships, and that is an area of growth for us. And we also on the direct side do a lot of recaptures with our members, and looking at, partnering with our credit bureau to look at where are our members financed today, what are their approximate rates, and we have decreased rates in the last year and a half. So how can we help them get into a rate that's more affordable, a payment that fits their budget
Mhm.
better? And you're right, the cost of cars are at an all-time high. I saw the average over 50,000 on a new auto for the first time ever. So we're looking for options to help them uh, soften up their budget a little bit.
Now, Kara, are you doing much leasing now?
We have not done any leasing. We did it years ago, but have not explored that option at this point.
Mhm.
The captives are so strong in that area. You almost have to look at it as that's an area where that's their expertise. That's their ball game, and used our portfolio in the auto area is about 90% used. So that's our expertise, and yeah, we enjoy being in that market.
And well, I was looking at borrowing, and today I guess it really kind of leads into cost of funds, right? I mean,
Hmm.
all credit unions struggled a bit like 2 years ago, got really, really tight. It's gotten a little better in the last few years, but deposit betas are still up, right? I mean, what we saw happen with Silicon Valley Bank and now especially consumers can move money so quickly. How are you managing this balance between CDs and your share accounts versus, going to the home loan bank and borrowing? I mean, you have to run a business, right? You have to
Hmm.
write loans. Your loan to share it's typically well over 100%, right? Where are you now?
Hmm. We are right around 108%. Yeah, and that's where we like to be,
Right.
because when you talk about a balance sheet, it is a balance. It is
Hmm.
balancing loans, it is balancing deposits, but we've also taken a very strong look at balancing that as well with borrowings. And there are times where you can borrow at a rate lower than you can offer deposits on. So managing those three areas is a priority for us, and we continue to do that daily. And there have been opportunities where our borrowing opportunity has been really low. We take advantage of that and then turn around and lend that at low rates as well.
Well, certainly your net interest income growth is showing that. So last question, as we think about 2026, you're going to go into planning soon if you haven't done so already. Um, Predictions, when you think about you're excited about in 2026 for Veridian and the credit union system, give us a couple of the things that you're excited about either for your credit union or the industry going into 2026.
Yeah, I'm really excited about, our expansion efforts, of course.
Mhm.
We're just did the groundbreaking in Eden Prairie. We've got some, other opportunities in that market, expanding our digital presence and making our digital even easier and really focusing on our membership and what how what learning we can use from their behavior to market to them for what we offer and what maybe they're not using today and maybe don't even know about, and using AI to build on that marketing presence. Some other things that we've got, that we've done through our planning is continuing to look at what other things we can do in the lending space. Where are our gaps? Where are our members still needing us to be? And not our members, not only our members today, but our members in the future, the younger generation. Where are our gaps with what they need today? And how can we build on that to be viable in the future?
Awesome. Well, Kara, thank you so much for joining us today. I do appreciate it.
Yes,
And
thank you.
thanks to our listeners as always. And please be sure to subscribe so you never miss an episode. And we'd also love if you'd leave a review to help more listeners discover 22 Minutes in Lending. So we'll see you back here next time. Thanks again. Thank you, Kara.
You're welcome, Vince.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.